Hello, everyone. How's everyone doing today? Good morning. Want to welcome our viewers at investing.com. Hope you're all weathering the storm okay. So I had a wedge drawn in S&Ps, and we're currently having a throwover, even though we're not confirming this low right here. So I have a hard time wanting to short it. 2600 is pretty important. You have some moving averages. We're probably tagging in here. Here's your weekly. Actually penetrating it, came in at 2630, and then really a big one that looks like almost a uptrend line is this 50-month, and we're right there. So uh, between here, a lot of people are talking about 2500 as a big trend line that would come in here. Uh, Very difficult to even consider trading a counter trend. So actually, what I noticed yesterday and took advantage of it for a scalp was S&P's making new lows, US dollar yen not making new lows. Okay. And I'd say the most interesting feature with the market getting clobbered yesterday, there was no flight to quality. Blake talked about his short bond trade. Look how much a TLT gave up from the initial. Look at this. What a blow off. So I was looking for it in here before we had this gap extension. Now it's happening. So I'm going to be very watching this with great interest because this could have been the end of wave 5 at 40. I remember I thought I was ambitious looking for 135 and then 110. I certainly didn't expect point 0.40. Okay, so what happened yesterday, even though we had pressure on risk, is rates have been moving up for a few days. Okay, so that's kind of unusual that you couldn't hide in the bond market. And if you made a move towards bonds at the beginning of this sell-off or even midstream, and you didn't rebalance and take some of your bonds off the table, that's a huge thing to give up in a week and a half with fear in the markets. So this is surprising to me. This may have been the top. So let's see what we get as far as a reaction, maybe halfway back, 61.8 back. So I have to ask myself if bonds can perform when we have historic risk off in terms of speed, which Ellioticians would call impulsiveness of the wave, compressed in time, and one of the fastest 10 to 20% corrections in history, that what's going to happen if there's ever a bear market rally in S&Ps and risk comes on for a few days, maybe even a week or two. So I think this is another important event that no one's talking about because everyone's very focused on stock indexes. I'd say something else that's a little aberrational, and Blake talked about this, that eventually, things really get serious, that the dollar might get a bid. I showed the island here, and I also showed that this is where I'd be booking longs if we got up there. I don't know if we are going to, it hasn't done anything wrong. We've retraced 38%, halfway back, so 97.27, and a lot of confluence up here. I think this would be a great shorting opportunity in the dollar if we get up there. And I know Blake is very busy. I could talk about some other things, but um, the guy's a trading machine, and he's probably got 50 different things going on today, and I'm not sure if there's data. So, Blake, I'm going to bring you on so you could get back to business, even though this is business too. Or maybe you're
Hey,
not ready to
hey,
come
man.
on. Huh?
Yeah, hey, sorry, I'm
I
just
forgot this is business too. All right.
scrambling around. Just
It's
oh
fun.
my god, it's crazy. I was just long the euro. I just took it off. I bought it. I'll tell you why I bought it. And then ahead of the ECB, I was a little nervous about it, but let me show you why. Just give me a second. Let me pull up everything here. What a crazy set. Here we are. We're back at limit down right now. Just
Yeah.
FYI. Um, now, uh, last night I did really well. I could have done a lot better than I did. So there's always that. So you always
Yeah.
look back on your trades and go, man, I could have just crushed it last night. I was short some dollar yen, and I closed it as we dropped through 104. And the Trump presser basically, because Donald Trump is not being seen as doing enough, or the Trump administration rather. What, in my opinion, let me give you my opinion. My opinion is we should be shutting everything down to stem the pandemic that is whisking through our country now. And unfortunately, we're going to be looking like Italy probably in the next couple weeks. Um, as cases increase and people get sick, and unfortunately it's going to be at the cost of human. Oh shoot, hold on really quick. What the hell? uh uh oh crap, I didn't know. Damn it, damn it, hold on, I'm sorry.
Do you want me? Do you want me to help
I
Blake?
covered too much of a position in my euro, so now I'm short a little bit, and I was like, why is my P&L moving the way it's moving? It's because I'm short some, and that's not what I wanted done. What a doofus. Anyway, that was my mistake. I was wondering what the hell was going on there. Um, so what we should have
Okay. So
done,
Blake, this is instructive because
huh?
it's instructive. What did you do? Just get out?
Oh yeah, I just got out.
Okay. So there's a pro. Never trade in error. Never
no,
trade in error.
no. It
Well,
was
people do, Blake. They go, oh, well, I'll see how it works out. It was never your trade.
right,
Trading. You know what I
right,
mean?
right.
That's all.
Yeah, yeah. So I was short. I was long euros, and then I got out of my position, and for some reason I thought I was. I closed everything out, but I closed too big of a position, so I was short a little bit, and it was going up in my face. I'm like, oh crap, I got to get out of that. Um, and yeah, I mean, I took a little bit of loss on it, but I'm still, overall net, good on the day. But man, that thing really did shoot up. It was so I was so. But let me go back and explain what happened last night. So we were hoping that Donald Trump would declare a state of emergency, right? That's what we were hoping for. Declare a state of emergency, get some additional funding that he would need, and basically lock us down. And so what happened is, we put on a travel ban to Europe starting tonight at midnight, I guess, and and we did get some funding, or we're going to pass some funding, but the numerous reports that I've read is that he didn't want to contradict himself, because just a week ago he said we have 15 cases and it's probably going to go to zero, and it's just going to miraculously disappear. And now here we are at 1,000 plus cases, and he doesn't want to contradict. Like, just last week he was really brushing everything off. This has been like one of the biggest, uh, probably jumbles we've seen in I mean in history, here
Yeah,
in the
leave it
US.
there in history.
Yeah, and so now the stock market said, "Oh my God, you're not doing enough," and how here we are, limit down. Um, my assumption is that the S&P will open limit down, and then we're going to test this long-term trend line. And this is where it gets a little tricky here for currency traders, because I bought. And let me tell you the reason why I bought the euro. I bought the euro because um, it here's last night's analysis, so you understand. Okay. last night, today, and key support at the 24.50. After an epic squeeze higher the last few weeks, the euro dollar looks to be in the midst of a pullback. The 112.30 to 112.50 level, which we currently trade at right now, looks to be strong support, as this was the breakout point. Okay, that was from the blog the other night, and then this morning, euro dollar came within pips of the long-term 38% retracement at the 112.21 level, and hit the 127 extension of the overnight lows to highs. ECB meeting today, which is weighing on price, and also the travel ban put on Europe by the USA. If the pair is going to bounce, these would be the levels. That was this morning, an hour ago. And so, I picked up the euro below 112.30 down here, and we did bounce, and then I got out of it here in the 40s, and then obviously I jumbled up that trade a little bit. But anyway, the euro's bouncing at current levels. Now I'm not going to be. I don't know how to trade the euro, and here. Let me explain to you the reason why. If you guys have understood my analysis for the last years, okay, I say years because Dale will probably tell you, or Steve, or any of these guys, I'm bullish. I was bearish the dollar until a certain point, meaning there is a point where the US dollar is going to be a funding issue. Okay, meaning that we are going to get into a liquidity issue at some point, and we're starting to see stresses in credit markets that are pretty high. So we could get to a GFC moment where the equity markets come under pressure so intensely that everybody starts running for dollars, and that we're on the cusp of it. I always said, and you can go back and listen the last 6 months, year and a half, whatever. I said that, yeah, when or if the markets are down 20%, which we're down 20% right now, this is where it starts to get a little. This is where we could see the dollar really start to rally, and I told you it's going to be weak as we sell off. The dollar is going to be weak, but there is a point where the dollar, when poop hits the fan, the dollar is the go-to currency. And it's tricky here. We have the ECB today, but you also have to realize there's another situation that we're faced with regarding dollars. Okay, there's a bigger issue. Can you guys imagine what the bigger issue with the dollar is right now? What's the bigger issue? Oh my God, the dollar Mexican peso. Holy Jesus. Holy cow.
Yeah, USD NOK as well. They've gone completely vertical.
Oh my God. Look at the dollar Mex. What's the bigger issue with the dollar right now? What do you guys think? What do you think, Steve?
Should I give the?
How about a confidence issue, right? So we're all plagued with this issue right now. Lack of confidence in the U.S. That is what's plaguing the stock market. If you don't know what's plaguing the stock, there's a lot of things, but this is last night was a clear indication of that. Clear, crystal clear. All right. Does that translate to dollars? I don't know. I don't know. And this is where, like I said, it's going to get a little muckety muck and a little interesting. So I'm not sure. This is why when you're not sure, guys, it's okay not to be trading. It is okay. It is okay to stand aside. Cash is a position. It's okay to be like, look, I don't know what to do here. And that's that's where I'm at right now. One of the other things that I'm looking at is I'm looking at the dollar yen. And yeah, I did short it last night, but I did wake up this morning thinking that the dollar yen was going to be trading below 103, and here we are. We're at 103.50, and I'm trying to figure out why that is. So, is it a dollar funding issue? I don't know. I still think that the dollar yen will trade down to 100. I just and ultimately this is where I think we're going. the 161% extension of this move, 127% extension of this move. We're going down to 100. I think that's where we're going. I just don't know. I'm not willing to short the dollar yen at this moment, thinking that's where we're going because of the way that the price action has been handled. So anyway, that's kind of what I'm thinking right now. And I'm just, oh, and I guess we should talk about the ECB. So the ECB is meeting today. They're in 30 minutes from right now, their ECB decision will be made. But more importantly, it is what's the ECB going to do? And I think they're going to be increasing their asset purchase program, which I think currently it's at 20 billion a month, and anything less than 40 billion a month is going to be no bueno. The market's not going to like it, meaning equities. Now, how does the euro respond to that? I'm not sure. I just don't know. I'm not 100% sure. So I think you guys just have to be really, really careful. This is a, very tricky situation down here. Wow, the Mexican peso. Holy cow. I mean, these moves. Holy Moses. Oh man, we rallied to 23 and back down to 22.40 and dropping again. I mean, this is serious
Hey,
crazy.
Blake, do you have any technical resistance in USD CAD up here?
On the
Just
what?
curious. Any resistance in USD CAD up here?
I mean, we have to go back a little bit. Let's take a look at weekly chart
Almost
here.
at 1.27.
Yeah,
Nothing really.
Yeah, I mean, we're clearing this resistance here,
Yeah.
so we're past the
That's okay.
618.
Yeah.
I would assume we're going to 141. I
Okay.
guess.
Thank you, buddy.
Yep. That's what I would think is
So,
happening.
if you guys are members, you could do what I just did, 8 hours, 10 hours a day. How long are you in the chat room?
I have 12, 15 hours a day, probably.
Wouldn't it be nice to ask Blake and Steve and Stell and all the other pros in the room what do you think? Yeah, see.
Look, I guess I should have traded out of that, huh? Just
always trade your errors, Blake.
You see, Blake, it was a God-sent gift, and you sent it away. You
I
should
know.
No,
it's so whippy out there. I like
9 times out of 10, you end up, if you play your error, it's not your plan. That's really the point.
Yeah, that's it. It's just it's so volatile. I probably could have traded out of, but I'm not. That's not what I do. It's like, oh crap, I made an error. I need to get out. That's
it's a bad habit.
It is a bad habit to get into. It's like if I got an error, I'm gonna trade out of it and immediately and take it and say, dude,
yeah.
And then slap myself silly for just making the error in the first place. So, but this is a lot of support down here in the euro. Just realize that we do have the ECB meeting today. I don't know how the euro is going to react. Honestly, I don't. And I think if you're trying to figure it out and you're like, well, look, the travel ban from the US is going to affect Europe is screwed. We're all screwed. So, I mean, to argue that, one way or the other, this is at this point in time, it's all flow and liquidity. And I do believe we are on the cusp of the dollar becoming a funding issue where the dollar really starts to strengthen. But I don't know if that's today. I don't know if we're right there. I mean, heck, we can come off this limit down and rally 5% today, and then the dollar's not going to. It's more of a non-issue. So, we'll see. But anyway, I guess the point I'm trying to make is be careful out there. It is dangerous waters. Trade smaller. I know I've been trying to preach that a lot, but it's important that you guys are being very careful around these levels and not getting too aggressive one direction or the other.
Are you practicing social distancing yet, Blake, you and your family?
Not yet, but you know, it was interesting. I was watching this video last night of a guy in Italy, like from Boots on the Ground,
Yeah.
and you know, in the grocery store, they have signs up that says "Stay 1 meter away from each other."
Yeah.
And I was like, wow, you know, I mean, that's, you know, like my kids are starting to practice that, but I don't know if I'm going to send my kids back to school next week after spring break. You know, why? And
Yeah.
I'm not so worried about them. I'm more worried about them
Bringing it.
bringing it and bringing it to our house or to my, you know, to our family's home. And that's what I'm more concerned with my kids. You know, because my
Yeah,
kids
who
are,
cares if they get it?
well,
It'll
my
just be
kids,
a cold for them.
my kids are, you know, fortunately at this point in time, they're healthy. And so I don't worry about them because they're not dealing with any, like,
Right.
especially like asthmatic health issues. But, you know, cause this is,
Respiratory stuff.
respiratory pulmonary type of disease, so, or virus. So you know, I worry more about them carrying the virus around and giving it to, you know, myself, my wife, my, you know, the grandparents and stuff like that, and other people too.
How about your
So
dogs?
dogs, I guess too. Yeah, I
Yeah.
guess, you know, I've heard
I
about
don't
that. But
know.
anyway,
Oh, really? You could give it to your pet?
there's there's they say that some dogs have carried it. I don't know.
Oh,
I don't know. I'm
wow.
not keeping up with that. That's like
Me
the least
either.
of my worries at
Yeah,
this moment.
not
Um,
mine.
what I'm more worried about right now is just what the euro is doing and what we're going to do with it, you know, moving forward. I think
All right,
that's
buddy.
that's going to be key. So yeah, just I think for the euro, you know, support's going to be at 112. You know, we can clearly see resistance right now. This is, you know, pretty clear. Damn it. Pretty clear for me. You know, this call 112.60 is going to be resistance. Let me delete this. Support is going to be you know, 112, and let's see what we do here, you know, and see how things go, and see if the ECB can move the needle or not. It may be a non-event, but like I said, I think it's more about the asset purchase program and, you know, what they're employing or not. So, Steve Stelios, I wanted to get your opinion on what do you guys, how do you guys feel about last night's price action?
Sell. I'm kidding. Uh, it's it doesn't feel at all bullish, does it?
Really?
No.
You're talking about the euro?
Stell said, Skype to me yesterday. This is all of our Draghi moment where we have to do whatever it takes to, you know, take care of
Draghi,
our family. Huh?
Draghi spelled with a U, I guess, right?
Why?
You're from drugs.
Draghi?
Yeah, Draghi.
Oh,
Because that's exactly what it is. It's the point that the drug addict that was getting used
oh
to
yes, the
getting,
opium.
you know,
Yeah.
even more opium every time he was
Yeah.
going on, was going cold turkey, has to face the reality that drug addiction is something that, you know, doesn't work up in the end.
You know, guys, what scares me? I read this today. I'm assuming it's true. It said that Vanguard are saying that only 1% of their clients has been reacting to the sell-off, and that 7 out of 10 are actually moving money into stocks. And Fidelity said that for every one sell order, there are 2.1 buy orders.
Yeah.
So people are still buying the dip, which
If
to me
that's
is
the case,
crazy.
there's a lot more downside. A lot.
Really?
And you know, remember months ago, we've been talking about equities with Steve, with Blake, and we always say this market has been conditioned to know that when the dip comes, you buy it for 10 years now.
Yeah,
And
that little cartoon, that BTFD cartoon.
Exactly.
Everyone sends it, you know, every time I was trying to sell a rally.
Yeah.
Oh,
Yep.
Dale, watch this.
Yeah, and it's been working for 10 years really well, and people are, you know, they're considering themselves really smart for doing it over and over again. Well done, but you know, when things start going south, stop doing it. You know, things have changed a lot, and we've said this for weeks now. You know, things are changing. The whole mentality of the market has changed.
It's
and
a Pavlov's response right now, right?
Yeah. I think as long as this persists, even without this, I think we have more downside. But as long as this persists, we have a lot more downside, unless all central banks, actually, I don't know what they can do. They can promise asset purchases of everything. Actually, no, they can go in and start buying equity ETFs. If they do that, obviously stocks will stop falling, like Japan are doing. But unless they do that, what's going to stop them? I don't know.
So I've got a friend of mine who's who he texted me yesterday. He's like, hey, I bought some options on Twitter, Budweiser, Alcoa, blah blah blah. And I'm like, you did? I'm like, he goes, I bought some longer term options. I'm like, you did? He's like, yeah. And I'm like, why? And he's like, yeah, this is overreaction. It's
Okay.
and he goes, I'm
Good
buying
luck.
options 2 months out. I'm like, that you understand that this market's going to go lower and it's not going to bounce, and your options are going to expire worthless. It's like,
Yeah.
but that is the mentality of a lot of people right now.
And a lot of people look at where a particular stock or index has moved in the past month or two, and they go, but it's moved so much. It has nothing to do with how much it's moved. It's what you think is going to happen from now onwards.
Yeah, there's a phrase for that, a recency bias, because if they zoom out a little bit more, then they could make a much better argument by saying, oh, this stock has moved 400% higher in 11 years. Perhaps this is not the place that it offers value.
Yeah, right. So anyway, guys, well, hey, I'm going to pass it over to you. I want to say good luck to everybody today. Please be careful in this volatility and high volatility environment. Be safe. Don't trade big. And I'm going to turn it over to you guys, and make sure you join us in the Forex Analytics family if you can. It's only $1 for 10 days. I know a lot of you guys in this high volatility environment have. We've had a lot of people come in, and be in the chat room, which is great. I hope it's really helping, those of you that have been joining in. So thanks, and I'm going to pass it over to you.
Thanks, Blake.
Thanks, guys.
Good luck today.
Thank you.
You
Love
too,
you,
good luck.
Blake.
What we're seeing now is liquidation of pretty much everything, and we've said
And
this
Stelio,
before.
the surprising thing is, I understand they're liquidating everything, but why are they selling their digital gold? I mean, how stupid are people? I mean, don't they understand that, here is the solution. You buy Bitcoin and, it's digital gold, store of value. I mean, it really surprises me that this happened. I mean, who could have guessed, right?
You did. You said, I want to see, you want to see how it acts in a negative market environment.
To be fair, Dale, it's not that I predicted it. It's common sense predicting
No,
it.
you predicted. You.
You know very well, for example,
Celio's
that, on the
artist.
team we have on Forex Analytics, there isn't a single person that believed that Bitcoin can actually do well during a recession. And if we've seen something, is that now in a period of crisis, in essence, Bitcoin is, and the rest of the cryptocurrencies even more actually, they're acting like high beta proxies of risk assets. And it makes sense. I mean, when people end up getting to the point that they actually have to liquidate gold to cover up their margin calls, who really believed that people are going to be piling in on digital risk?
Yeah, and actually, talking about gold, it's dropped $100 from the peak or something like that, or a bit less, which is 6% or whatever it is. So gold, in my opinion, is still holding up pretty well.
Of course,
even though it's getting liquidated.
Yeah, if we overlay gold with S&P, I mean, where would you want to be the last month? In gold or S&P? I mean, as simple as that.
Yeah.
How about silver or S&P?
Silver is underperforming, but still.
But still doing much better than S&P, actually. Yes, absolutely.
A little better.
And Dale, keep in mind that, and everybody else, of course, keep in mind that one of the reasons, besides some people having to liquidate some positions to cover like margin calls and everything else, keep in mind that one of the reasons, I'm gonna bring, by the way, the data flash up. Data again, I'm going to repeat that in essence they're backwards looking, so the market isn't going to care that much. Although in a bear market, the market will care about negative data. So if the data are fine, I believe that the market isn't going to care at all, because the market thinks that there are much worse problems out there than seeing if last month.
Steve, sorry to interrupt. Germany is ready to ditch balanced budget to combat coronavirus. That's pretty big.
That's pretty big, Stelio, but people that know Germany and know that Germans know what they're doing, by Germany saying that they're ready to ditch balanced budget, I hope they don't expect that Germany is going to go to an 8 or 9% deficit
No,
like the US
of
has, for
course not.
example.
But it's a step, and it's a sign.
Yeah.
It's a
What
sign.
Germany is probably going to do is that it's going to allow itself to go to, let's say, 2-3% deficit. And here we have the data, by the way. PPI a lot lower. Initial jobless claims more or less as expected. But as I said, don't expect the market to react to any of that. So we had a look at the data, but don't really pay attention to them because they're not going to be moving the market. I think that data are going to start showing us what the effect of the economy is going to be. They're going to start showing us roughly in like 15 days from today, something like that. So going back to what I was saying about gold, keep that in mind. If you look at TIPS, the Treasury inflation protected securities, which in essence try to discount what's going to happen with inflation. One of the reasons that gold and silver is falling somewhat is because the market is expecting that this shock is going to be extremely disinflationary. So we know very well that when inflation goes down, real rates go up comparatively, and that is negative for gold and silver. Now, my thesis has been since a long time, and I stay with it until we see what happens, is that initially it's normal that the market is pricing in something like that, but I believe that the solution they're going to try to give to the problem is going to end up being extremely inflationary. So even if we see a short to medium term pullback from gold because the market is afraid that disinflationary pressures are going to make gold less liked, let's say. I think that the market is going to realize that this time we don't have a repeat of 2008, but we have something totally different in hand. So I'm still going to keep my long thesis bias for gold and silver. As I said some days ago, it's clear that momentum has really waned in gold, and of course we might see like a pullback. So I'm not, I don't have a long position on the financial markets because I do own physical gold. But I do believe that this is not going to be some kind of a long-term top that we're seeing here. It's more likely that it's going to be another corrective pullback before we move quite higher. Stelio, FX Trader is asking if you're still short German bonds.
Yes, I am. I started a very small position, and I'm keeping it for now. So yes, I am.
Yeah, and you don't even have a cost for doing that.
No, of course not. That's a good thing about it. But
you don't have to pay to carry that position. Yes. Oppositely from what happened to people that thought that selling USDMXN to collect a 5% annual carry was a smart idea, and within like 17 trading days they've lost 5 years worth of overnight carry because the USDMXN exploded higher as the risk on positions, including FX, unwound in a spectacular manner. So this is something that you should remember in the markets, because that's what usually happens. People that are perma bullish, they keep collecting pennies, and after some point they get so so optimistic because it's worked for so long that they can't distinguish anymore the completely asymmetrical risk reward that they have in front of them. And that's how they end up having done great for 4 years, 5 years, 6 years, 7 years, and then they blow up in 2 months. And we've seen that again and again, and unfortunately it's going to it's going to be repeating in the history of the financial markets. Now, not much to say, and I'm going to go back to the charts now. Unless, Telio, do we have anything else, from
No, not really. No, just ECB in 10 minutes, but otherwise, everything takes second stage now to the developments in the markets, really.
Yeah,
What
absolutely.
will my girlfriend say today?
Sorry?
I'm wondering what my girlfriend will say today. Christine, baby.
Christine. Okay.
Oh, man.
Yeah.
Does she know it?
Yeah, I'll ask her.
Seriously, I'd rather
Should I
date.
stay or should I go? Go on.
I'd rather date Steve.
I was thinking of threesome.
With me?
You
I
and
hope not.
Christine. Yeah.
Oh my God.
Anyway,
Okay,
so
S&P here at 2600. It's, if you zoom out, you're going to notice that it's quite an interesting support area. Now,
yeah,
when in such a vicious bear market, we're talking about interesting areas.
they
Let
don't
me
mean
make it
anything.
let me make it very clear. That doesn't mean that you should go out there and buy everything thinking that that's it. Let me make it very, very clear. Even if we assume that we see a low today and we start rebounding, in an emphatic manner, keep two things in mind. First of all, I'm going to still be looking to be short because this market will go lower. And I have a very high conviction about that personally. That's not a trading advice, right? My personal conviction is what I'm what I'm explaining. Two, keep in mind that bear market rallies can be very sharp, and usually what they do is that they give back hope to bulls that have been battered down, and they make them want to break even. So once they see the market like rebounding with some momentum, they're like, okay, here is my opportunity to make back what I've lost during the last month, and they martingale. And then when the market turns lower again, they blow up, and by blowing up, they give more fuel to the market to accelerate lower. So at some point, we're going to see again a rally. There's no question about it. And why not? This 2585 to 2600 area is an interesting area of support. There are more down there, but this one is definitely interesting. So let's assume that we get like some big promise from the ECB that people are not expecting that much. I mean, they're expecting that they might cut rates a little bit more, and they might guide forward to like more monetary stimulus or whatever. But it's not that people are expecting like a huge bazooka from the ECB where they stand. So let's assume that the ECB delivers, and they deliver something a lot more than the market expects, and then Trump comes out and promises new monetary stimulus. And I'm saying monetary stimulus. Let me make that very clear. People are like, oh, we've extinguished at a big extent or fully like the ability of monetary policy to work down there. So we should try fiscal policy. Let me ask a very basic question that some people don't seem to be asking. What does fiscal policy means when you're hugely indebted and are running high deficits? It means that you're going to get even more debt. And who is the one that's going to monetize that debt? The central bank. So in essence, promising Germany, that has a balanced budget for so many years and has actually delivered like too many surpluses even during the past 20 years, can actually have expansionary fiscal policy, and it's going to be expansionary fiscal policy. The US cannot have expansionary fiscal policy because expansionary fiscal policy will just mean more bonds that there's nobody else, the Fed, will have to monetize. So in essence, if you are so much in debt and you have so big deficit, fiscal policy equals monetary policy, because the only one that can buy those bonds is your central bank, which equals monetary policy. So Germany can expand their fiscal policy. The US, for example, can't. Italy can't. Right? So you have to make that distinction. Now, and let's assume also, going back to my initial thought, that Trump comes out and promises like, something like in the form of fiscal policy that's impressive or whatever, and then you have the markets being like, okay, they're finally willing to do what it needs to be done, and they start rallying. I would be looking for this rally to fail anywhere between 28.85, 29.50. These are strong areas of resistance. So anywhere in between there, I would expect this rally to fail, and I would expect to see more downside. So, would I be advocating that somebody should short right here? No, because there is no risk reward anymore. But I think that any decent rebound is going to be a nice shorting opportunity, and I know that it goes counter to psychology, to human psychology. But the sharper the rally will be, the more interested I'm going to be in selling it. So, in my opinion, you shouldn't be, scared of selling it because it's going to seem to be very strong, and you're going to start thinking, what if it works? What if it actually works? I mean, what if this is the bottom? Because that's usually what bear market rallies do. They make you question your thesis that this is, a strong bear market, and then you hesitate in selling a strong rebound, and then the market moves lower, and you're out of the market. So that's what I expect to happen with stocks. Now, having to do with FX, nothing has changed in my opinion having to do with the Euro USD. The Euro USD has broken above this descending channel that dates back to August 2018. So, I drew that a few days ago that, the market might pull back and retest this 111.50 area. And from there, we might see more strength. And I still believe that it's a decent opportunity. I'm not saying that it's going to work because I can't possibly have any idea because we don't even know what the ECB is going to say. What I'm saying though is that from a risk reward perspective, I might actually take a stab in buying 111.50 because I think it makes sense. I'm not going to be willing to risk much. I mean, I might buy like half a position of what at 111.50. I might be willing to buy a little bit more at 111, and then I'm going to be bailing out, let's say, at 110.50 if that doesn't work. So it's not that I'm willing to throw everything at it, but I think that from a risk reward perspective, it does make sense. Now, let me go through some of your questions. GBP, yeah, thank you. The pound is getting beaten up, and that's not only the issue here. The issue is that the pound is slicing through this previous low, this descending channel. Of course, it's too early on the day because we're currently trading below it, but there's nobody that tells you that the pound can't close the day at 127.30, for example, in which case it's not going to be closing below it. And the 200 daily moving average, if I zoom in, you can see it here. There it is. It almost confluences with this descending channel. It currently passes from 127. So bottom line, as a technical event, closing below this confluence of the descending channel and the 200 daily moving average, it's definitely not going to be bullish, right? Now, I have every right to do so, and I'm very honest and open about it. So I'm going to say again what I've been saying. I'm very bearish the dollar long term. So instead of having sleepless nights thinking that I took a trade based on technical analysis, but totally against my fundamental thesis, I would rather be selling the dollar at areas that make sense than buying the dollar because it makes some technical breaks. I'm not saying that you can't make money trading against your fundamental thesis and based on technical analysis. You absolutely can, but I'd rather combine both of them because I feel much better and I can sleep at night properly instead of waking up every 2 hours and grabbing my mobile phone and checking my positions. So although I do understand why it's appealing to want to sell the cable if it closes below this confluence of supports, personally, I'm not going to be doing it. So as simple as that. Now, USD MXN has gone vertical, but that's not the only thing that has gone vertical. The other thing that has gone vertical is USD NOK, and it makes sense because not only we're seeing a little bit of a recovery from the US dollar, but we're seeing crude turning lower once again, which isn't a surprise, by the way, because I told you that, my thesis is that crude can go lower. It's not going to be low for much longer, in my opinion. So it's not going to stay more than a few months. But within these few months, I believe that it can even, for the first time in I don't know how many years, even hit temporarily high teens. I mean, I wouldn't find it impossible to see crude trading at 18, 19, 17, although very temporarily, right? So I think the path of least resistance,
Steve,
as we yes,
sorry to
Delia?
interrupt. We have ECB
Yeah.
just now.
Interrupt me for whatever you want. I mean, just let me know what they do.
Okay, minus 50, so they cut 50.
They cut 50.
Sorry, the deposit rate is minus 50. Sorry.
Okay, because they cut 50.
Key rate is at 0. Okay.
Okay. Look at the euro rebounding, by the way, so far.
Yes.
So far, euro traders not impressed.
They're under delivering, basically, I think.
Yeah, no surprise from the ECB, because don't forget who is in charge of the ECB.
Unchanged.
Thank God for us Europeans, it's the Bundesbank.
Yeah, I saw the minus 50. I thought, Diego, they cut 50.
Yeah,
but
if it was a minus 50,
rate.
I would be hugely surprised, because then that would take us to a rate that there would be no question in my mind that it's pure distraction. I mean, there's nothing positive that would come out of having minus 90 basis points of interest rates or minus 80 points of interest rates.
Yeah.
Anyhow, so far the euro doesn't seem to be impressed, having to do with what the ECB wants to deliver. It has pared back its losses from earlier, and as I've said, above 111.50 from a technical perspective, I see absolutely no reason that you want to be short the euro USD, and that's what I think about it. ECB leaves rates unchanged, announces new LTRO. Yeah, no surprise there. More quantitative easing coming, which of course isn't going to do much. But once if you are a hammer, you try to perceive every problem as a nail, and you try to hit it on the head. But that doesn't mean that every problem is a nail, and it doesn't mean that you're going to solve it by hitting it on the head. So they're desperate as well. Of course they have huge political pressures, so they're trying to deliver what politicians are hoping that if they deliver is going to do something, but it's not going to do much. ESF open 2 circuit breakers or just the one? I think one to begin with, and then we'll have to wait for the second one. Back to crude. So what I was saying about crude, I think that's what we drew. What was it? Yesterday, the day before yesterday, something like that. As I said, as long as we stay below 37.50, crude can move even lower. So I wouldn't be surprised to see crude, go below the 2016 low at 26, even below that. But let me make it very clear. I'm going to be extremely interested in buying crude oil. And although I'm not a stock trader and I very rarely do, I might actually build like a little stock portfolio that will include some of the very big names of oil companies, because trust me, companies like BP, Shell, they're not going to go under. There are a lot of companies that are going to go under in the industry, but the big names that have been out there for 100 years, they're not going to go under. And the prices will have gone to trash, and that's when you want to buy. It's not that you want to buy everything that has been trashed, because there are many things that are getting trashed for a very good reason that should have been at zero a long time ago. So you have to distinguish between what actually has value and not what has a relative value to where it used to be, right? So you have to have to make an objective analysis about what really has value. And in my opinion, the lower crude goes, the better the value that these type of companies are going to offer. So, I'm really crossing my fingers and hoping that I'm going to see some kind of an extreme low in crude. And, when I see like headlines becoming, too thick, like, discussing the possibility of seeing like crude at 15, and some people coming out and saying, can we see single digit numbers in crude? That's when I'm going to be very interested in buying crude. Okay. And I think that's going to be an amazing trade in the time ahead. So, I'm already looking out for opportunities that might arise in the months ahead. And my number one at the moment is crude, but not yet. It can move a lot lower from here. So, yeah, one more thing, actually, before I go to questions. Aussie and Kiwi. And the reason I want to show this is because Kiwi is testing this descending channels support. And at the same time, the multi-year low that we had here, I'm going to, for the time being, I'm going to, take out of the equation and not take into account the spike that we had last week, this spike lower, because it was literally a spike. And Aussie is at multi-year lows, of course, but is also testing this descending channels support. So, I'm not saying that you should buy them, because obviously, as long as risk is getting demolished, there isn't an easy scenario under which the Aussie and Kiwi can rebound, really. But I'm going to say that, if you really want to be contrarian in FX, and if you're really looking to buy something that has some correlation with risk, Aussie and Kiwi at current levels don't look that bad. This is also, by the way, confluencing also with a 127% extension of the last rebound. So, just wanted to show those because they're currently testing, key support areas as well as the S&P. By the way, the euro is now positive on the day so far, early in the day, of course, leaving behind a hammer. Too early to make assumptions, but if you see a hammer at the end of the day, and euro having kept its ground above this broken descending channel, my advice is don't try to be short the euro USD. As simple as that. Okay. And if you want to look at it from the perspective of the DXY, because it is extremely interesting, look at this. The DXY today at the highs back tested this broken ascending channel, and so far it's failing. And that's what we drew several days ago. I said that, listen, we might see a rebound from the DXY from here, but be careful because it might get rejected from the broken
Great
channel.
call.
Yeah, too early, coach. I mean, it might go above it, but so far, this channel seems to be working so far. And
I thought we might get to 97.88, your next red box up there.
And
but
I'm going to
now
be
it's
very
looking less likely.
Yeah, I'm going to be very interested to see how we're going to close the day, because if we close the day by leaving behind a bearish candle here, I'm going to be looking much lower in the DXY. And of course, knowing that, the Euro USD is 58% of the DXY. And if you add other currency pairs that are very highly correlated with the Euro, like the SEK, the Swiss franc, etc., you can take that percentage higher, closer to 70%. Then obviously, a big rejection here from the DXY, is very bad news for people that want to fade the recent breakout in the Euro USD, because there is absolutely no way that the DXY can turn lower from here, and at the same time, Euro USD turning lower. It's either one or the other that's going to happen. They can't both happen at the same time. Okay, so let me go through some of your questions. Bitcoin lost more than 20% in the past 3 hours. Yeah, I mean, really, as I wrote on Twitter, it's amazing that people get to love a specific instrument. Okay, they get to love a specific instrument, and they then, after they fall in love with it, they try to find excuses of why that instrument can actually work. And we've seen that very clearly with Bitcoin. Initially, they were trying to persuade everybody that Bitcoin and the rest of the cryptocurrencies are the future to transactions. When simple mathematics and the technology proved that it's impossible to transact with Bitcoin on a global scale because Bitcoin can only make something like 3-4 transactions per second, something like that, which even if it was 300 transactions per second on a global scale, it would still be, as close to zero as possible. Then they had to give it a new role. So the new role they thought of giving it was the role of digital gold. At some point, that seemed to not be working, so they found a new role for it. They said that, oh, the value in that is that it's completely uncorrelated as an asset. So no matter what your portfolio might do, Bitcoin might do something completely different. First of all, I have no idea what the value of an uncorrelated asset is, because if you don't know where you stand with that asset, how exactly can you factor it in any risk assessment you want to do? So I don't know why they're trying to spin the uncorrelated term as a positive one. I really have no clue. But even if we assume that it is a positive one, that already got disproved once again. Why? Because as I said, look at what happened during a big sell-off. Not only Bitcoin fell in correlation with stocks, but it fell as a high beta stock. So when the US stock market was falling 5%, it was falling 10%. When it was falling 6%, it was falling 10%. So not only it's not uncorrelated, at least when when the shit hits the fan, and excuse my language, but it's even more correlated than what you would want it to be. So do you like cryptocurrencies? Can you make money trading cryptocurrencies? Yeah, of course you can make money trading cryptocurrencies, both long and short at whatever else. But don't try to give them a role that they don't have. What cryptocurrencies are is they are high risk, speculative digital assets. That's what they are. Now, do you want to accept that function that they have and you like to trade them and make money? Great, fine. I have nothing against it. But if you're trying to convince yourself that they're digital gold, uncorrelated, they're going to preserve the value of your money or whatever, you're just fooling yourself. As simple as that. So do what you wish, but don't fool yourself that they are what they aren't. So let's go to bonds. And the reason I want to go to bonds is because, there is a question that Dale asked before, and I've seen a lot of people ask it. And the question is, have we seen like a blow off top? This is the yields. These are the yields. So if you want to look at the bonds, here they are. Have we seen a blow off top in a 40-year bull market that we have in bonds? I have to say that it's too early to say that. Now, first of all, there is no question about it. Historians looking back several years from now, they're going to be laughing by the fact that there were people willing to loan Greece for under 1%, the US with its current deficits and debt and inflation with 0.4%, etc., etc. Now, the fact that there is absolutely no value here in bonds, does it mean that they cannot go higher and yields go lower from here? No, it doesn't. It doesn't. So I would be a little bit careful here, because this market can get even more irrational. Don't forget that we have most likely now seen the bursting of the stock market bubble, but we still have the biggest bubble, which is the bond bubble. And as long as people keep believing that perhaps the bond bubble is a refuge to the other bubble, the stock market bubble blowing up, bonds might keep doing well. My opinion is that that's not going to be the case for much longer. Okay, but that's not a timing indicator, because much longer is also in a year from now or in 2 years from now. So although I won't be buying bonds, even if you put a gun on my head, that doesn't mean that I would be selling them necessarily here. Now, if I was looking for a long-term trade, a really long-term trade, I would be selling them here. But that would be much more of a long-term trade than I would want to have at the moment. I'm more of a medium-term trader. I mean, I like to trade from like a few days to a few weeks out usually. So since I believe there is a decent chance that in a few weeks nothing will have changed having to do with bonds, I absolutely have no reason to want to do something about them. Coach, do we have an interview today?
Yes, buddy.
Okay, who do we have?
DJ Thistle, great technician.
Okay.
Actually, Matt's going to be talking about not projections this time, but some of his trading methodologies, especially in light of this extreme volatility. So we're going to get a look at, usually people hold that kind of close to their vest. They don't want to teach you their tricks, but Matt's here to show us how he does it.
Okay, very fast answer to some questions, and the question had to do with, like, for example, CAD yen. Listen, I'm very bearish the CAD and quite bullish as long as we are below 105.30 the yen. So I see nothing bullish with CAD yen. Now, it has stalled at the 161.8, so we might see a rebound, but let me make it clear, as long as we stay below 78.50, there's nothing bullish with CAD yen, and the same applies to every yen pair that you currently see out there. Okay, so very briefly that, and we have a question about Aussie Kiwi, which is quite weird under current volatility, but thank you for reminding me, because Aussie Kiwi is actually breaking down from this channel that dates back to November 2018. So it is making a bearish move. So I do think that if you really want to trade Aussie Kiwi, which is completely uncorrelated to anything risk on, risk off at the moment, I mean, almost uncorrelated, because it has a slight correlation with risk, a very slight one. I think that Aussie Kiwi might be breaking down and you might see a move towards parity. Okay. Thank you, Coach. Enjoy the interview.
Okay, Steve. Thank you. Matt, welcome back. I'm going to set you up now. You're unmuted now, Matt. Welcome back to Face. How are you, buddy?
Oh, all right. Looking at Bitcoin and things this morning, and pretty rough out there.
Yeah, nowhere to hide, even the bonds yesterday. So, Steve, if you could stop sharing your screen, we'll let Matt do it.
There you go.
Thank you very much. All right, Matt, have you been here since we moved to Zoom? There's a little green box on your drop-down menu that says share.
Yeah, it's got kind of a tab here, share, screen.
There we go. It's coming
Okay,
up.
so I ended up, so you can see this, right?
Yep.
Got
your Twitter, got all your charts, everything up here.
So I ended up changing my presentation like 3 times, and even since I messaged you.
Okay.
So
it's a trader's prerogative, not just a woman's prerogative.
Yeah, I guess
to change their
so.
mind. All right, go ahead.
Everything's been so crazy. Yeah, so it's early AM Pacific here, and Bitcoin was a lot higher when I went to bed, and I'm just kind of scratching the dust out of my eyes and picking my jaw up off the ground here. So just give me a second.
Okay.
So the general thesis for this interview was that I think, I don't want to, not an I called it or I told you so moment, but that through some interesting patterns, I had been talking about this for the last little while. Never could I have assumed a virus was going to be what did us in for the market. But let's take a look.
Do you think
anyway.
the virus, the virus did us in, or the virus is exposing fractures and weaknesses and the downside of financial engineering?
Yeah, I mean, at the end of the day, if everything's closing and businesses are going on hiatus, and that means,
true.
Balance sheets, revenue, yada, yada. So at the very least, it's just showing us a very I would say overreaction in a financial sense. I mean, from what we've seen out of China and how well South Korea has dealt with things, there's only been like 60 deaths there versus how things have gone in Italy. I would say that, there's a social need to overreact to a degree, right, in North America, to be cautious so things don't get out of hand in certain areas. But I think from the financial perspective, it's an overreaction. Why? I don't think markets need to sell off this much because, it's not like we have 10, 20, 100,000 deaths already. And to try and price that in seems, I don't know, a little crazy. Anyway,
Okay.
so, yeah, and with that said, with the way everything is panning out in North America and things are ramping up, when you look at it, sort of the numbers from Italy and things like that, we'll see how things really do go in the next 2 weeks in North America. I think people obviously don't need to be stocking up on toilet paper, probably be looking at, obviously your canned foods make sense, but people should probably be hitting the vitamin D and vitamin C a little hard to pump up their immune systems, because this was already one of the strongest flu seasons in recent memory. I remember being quite sick in the 2017-2018 season here, and you can see at the beginning of this year's flu season, it was already extremely high. So the North American hospital and medical system is already being pushed quite hard. So I think basically the goal here in North America is just to slow things so that hospitals
Are not overwhelmed.
Yeah, exactly.
Yeah.
So
do you think you said I think you wrote that you think that we're preventing spread with what we've done so far here in North America?
Well, or that seems to be what the plan going forward is it's just a slow spread, forward. Right? Yeah, because
don't you think we're a little late? And I mean, with the testing and everything.
Well, I think from a testing perspective, we're probably testing deaths, right? So I think because North America is isolated by oceans on either side, that because basically it's China was lying about the numbers. Okay, well then South Korea got it, and look at how they've been handling. So we're going to say, well, South Korea is lying, or these people are lying, America's lying. So okay, let's just say everybody's lying about the numbers then. So, and even if that's the case, they aren't. We're not hearing about ICUs totally overrun in America for the last 3 months, right? That hasn't been the case. So it has been slower here. So anyway, seasonal flu, things were already pretty lit. Social distancing, right? I was saying here, for the people that are where things are still fairly normal in North America. I mean, picking up a job in a grocery store, stocking shelves, or a pharmacy could be a good thing for young people or traders that, my crypto people that might be listening. There's a lot of low cap traders, and these are jobs that are going to still keep going. So, to the non-high cap people out there, go get yourself a job stocking shelves, because you're still going to have a job no matter how bad this gets. My general thesis for the last while at the Bitcoin top was, if an economic event ever happened, I believe Bitcoin would sell off too, as other investors cover their losses. And I think it will bounce quite hard like gold did before. And I've talked about that before. When stocks crash, everybody exits everything that's made them money as well too, because they're covering their losses. So I think that this happened too in the last crisis, and I think that Bitcoin is doing exactly what it should, which is that it's a risk-on asset, and I think that as things sort of start,
you never really bought into that it was a hedge against economic chaos and digital gold.
Open about that one, no.
Yeah,
it could be digital gold, but that doesn't mean gold in the sense that of the digital assets, it's the gold standard and the bet, on a large time frame, the best store of value compared to a lot of altcoins, but no, not the hedge kind of thing.
Okay.
So I've done a lot of stuff with, sunspots and other astrology stuff that I do. And so something I was looking at out of a cycle perspective was that I've been looking at like a 1987 style event for the past year or so, has what I've tweeted as what would be the most likely scenario as something to pop up at us. I don't really think that the 2008 type narrative fits where we are in the market or where the strength of businesses was before. Before the coronavirus and the market sell-off happened, you could argue, there's a lot of debt in the system, et cetera, but that, companies were still doing okay. There was still growth in the market. So once this sort of pans out a bit and a vaccine comes on the market, are we going to be looking at a strong bounce as well too?
Do you think that we'll have a vaccine? I mean, I've read things that this virus, coronas, are much more difficult to develop a vaccine because of how they mutate.
Right. I'm not a
yeah, I know.
Just so I can't say.
But you're just assuming we'll have one.
Yeah, I and from what I've seen from other countries, Israel, Thailand has had a really good success rate, kind of using a concoction of drugs right now. So I mean, other countries that push the envelope a little more are having results, doing things a little unconventionally. So I would assume that something's going to pop up. I'm not really a believer that this is going to be a full out Spanish flu kind of thing where 50 million people die. A couple million could definitely happen if we don't keep it together.
So, do you know that during the Spanish flu, the first wave happened towards the end of
exactly. So the
World War One.
Yeah, so this summer is important, that a lot of these, music festivals and things like that might see things, calm down over the spring and when the temperature gets warmer, and apparently the virus has, some pushback against UV and whatnot. People might think it's all, all good, but then all our interaction at the end of the summer could lead to a bad fall. Yeah, that's totally possible, but
yeah, because that's how it happened back then.
Yeah, exactly.
Okay.
We have more means nowadays too. Yeah, so I was looking for the 87. So the thesis here was Bitcoin isn't a store of value in a crisis, and like gold, when everything first pops off, really nothing goes up, and that from my perspective, I think based on balance sheets and things like that, compared to before the virus, things seemed generally healthy. Obviously, a lot of debt out there, but it's not like everything was already smashing its way down and then a virus came out. So I think there's room for recovery. And then the next part we're going to get into is having a look at the correlation here between sunspot maximum and minimum. So the sunspot minimum is where we have lots of cosmic rays coming in, and then when there's sunspots, the extra sunspot
flares,
and everything, solar energy blocks a lot of the cosmic rays. And as we see, a lot of the tops of the sunspot cycles are when recessions come in, and then often on the downside is where it can hit even harder than just a recession, depression, or along that lines. So what we've seen here was this solar cycle. It's about every 11 years. And then we see a greater one here that's every 100 or so years. And back to Carrie's chart here. So everyone can go check out the 17.6 year stock market cycle, because that's his work there. So he was basically saying that, come 2023, that there would be a big pullback within this market. And then at, 2035 would kind of be the end of things. Now, if we were to go back here on the grand cycle, 2035 is kind of in the new Dalton minimum. And what each of these kind of waves up and down represents is these ones, like every 10 years. So even though there's a gyration to high and low and high and low, it's still these grand cycles to high and grand cycles to low. So right now we are in a solar minimum. We'll go over here to space weather and people can see here. So here was the last solar maximum where
Next
there was
time, can you put an RSI up for me on your solar charts?
Yeah, right. So we're seeing, back in 2013, 14, we were at a maximum where we had lots of sunspots, and then back here, 2008, 2009, the last crisis was a solar minimum, and that's also what we're seeing here now with lots of spotless days. So
yeah,
that's showing that space weather there.
Even the sun is weak.
Yeah, so space weather here is showing like an 0809 max solar minimum, and same as now, and then 2014 the max, and then that's like this extended over here, right? So that's the 0809 last time, and then the 14, and then we're down here again. So what that is doing is playing out this last kind of bump in here, right in here. So after this cycle, we should be seeing the new Dalton minimum, which is why we're sort of, now this is back here in the
early 1900.
panic. Yeah. And then a lot of these ones, these highs and lows correlate with other empires that have had their great falls as well too. So I don't want to say this is the end of the American empire, but this is definitely a massive shift happening right now. And I think that these grand cycles are showing that. And I think that we have even seen that these cycles correlate very well to pandemics. Most of the time they pop out near the top of the solar cycle or the bottom of the solar cycle. And that's exactly what we've seen here with recessions too, right? Hits at the top or hard again at the bottom. It's very rare that you have one kind of mid-course, and it's roughly the same kind of vibe on the flu pandemics as well. So there's this big correlation between what's out there and what's down here, as above, so below. So that was kind of this this general thesis that things are going to get bad, nothing's going to be a hedge, and then chances are this first event is going to be more 1987 like, and that we'll see a stronger bounce because things were pretty good before the event, and that the weakness will then roll off afterwards, which is me then saying
all right, so I mean, it didn't all happen in one day.
Yeah, exactly.
The crash in 87 happened in a day, pretty much, but major part of it was 30% in a day.
Totally, yes, but it's more about when you're looking at patterns over the course of time. Just the
we just got, instead of
patterns
a day, it took 3 weeks.
Yeah, right, exactly.
Okay.
So, and then keeping on that whole as above, so below, here's an interesting chart. This is the green line is the trading the S&P 500 from 3 days after the full moon for 2 weeks. And then the red line is trading the S&P, like buying and holding from 3 days after the new moon for 2 weeks. So there's a large disparity in profits from holding for full to new moon versus holding new moon to full moon.
Interesting.
So from the sunspots to this and other things that I won't get into, that's sort of the thesis or the basis of a book I'm trying to write this year, which is that
is that going to be the title? What is above is below?
Yeah, it's an astronomical, something along the lines of I was going to use like astrology, but I think astrology can push people away. So I'm just going to go with astronomical and just show that, yes, there are correlations between the two. And I think that a lot of people try and use astrology for finance, but don't really go out of their way to say, hey, here's some concrete examples where we can show there's unbelievable correlation. So, let's take this a little more seriously. And I think the fact that, I can, when everything seems fine and I say, okay, well, we could have saying a 1987 style event is like saying a very hard, violent crash, is going to happen. And when was this tweet? Beginning of January. Everything seemed fine then. And then it all happened. And could I have predicted a flu? No, but the charts and the cycles said something else. One reason why that became more of an option to me for this year than next year was watching natural gas break down from this pattern late last year. So I think natural gas is another way that people might be able to gauge when a rebound on this is all going to happen structurally, because this has all been holding too well. If it accelerates and goes under the line, probably will be a sharp correction, because we're coming from this pipeline explosion at
Right.
450 it was, and we're already
Okay.
down to 150. So,
All right, so we're having a
damage has
little
been done.
bounce here, but you don't think it's it. We get a little bounce and then one more flush.
It kind of seems like it, because we're also coming into we're exiting the winter. So natural gas USD is North America, really looking at North America. So there's going to be less demand over the spring and summer as well too. So even though there could be a technical bounce to kind of fill how violently this came in, it could definitely make sense that we could see more push down throughout the summer, and then a bounce coming into the fall would make more sense to me.
Okay.
The pain and how bad can it get? We'll see that on the great maximums, it very rarely holds above and stays above. And the same goes for the downside too. And we see there's only ever a couple, other than the Great Recession, since the VIX became an instrument in 1990. There's only been that one time where it ever spent even 2 months over 35. So again, like, this is an interesting situation, and that it's a virus, but we're also coming into the summer season, which should help a bit. So if North America's kind of travel bans and things like that can help a bit. Again, it's slowing it. It's not going to stop it. But if it can slow things so that the hospitals aren't overwhelmed, and then that makes people feel like it's not just ravaging society, and then markets will like things a little better, right? So it's all about slow things right now, and looking at things that have happened in the past that are markers to show how bad have things got on a historical basis. How long does it usually last for? And then when do I start looking? So I think that it's hitting what is historically pretty bad times, and it doesn't usually hold those bad times for all that long. So once enough panic is hit, and I think for stock people, when they wake up feeling how North American Bitcoin people are gonna wake up in an hour or two and look at price and feel pretty horrible. I think when stock market people have that moment, the turnaround will be probably pretty swift. So two things that we're going to look at for stock charts here is, one is a more short term. I had taken this fractal in here and this in here, and sort of pasted them in with the bars program. I think it was around here when I did it, and it has just kept cratering down this. It's going to open lower this morning too.
So you think we're within days of turn for a pretty strong bear market rally?
Yeah, I mean, we're going to have to see. The reason again, it's a virus, and people are definitely overreacting on the financial selling side of things. But so the pattern here that we're looking at is this sharp sell-off, sharp sell-off, sharp sell-off. And then we kind of get this M, and then just a channel up, and then this M, and it does break lower, but the break lower is a very obvious V. And then after the V, we still have this kind of squiggly channel, and then it tightens at the top, right? So with the election out here in November, there's definitely an opportunity where we could see, this sell-off, the M pattern, that could either continue to sell off into May, or base a bit. Both of these patterns plus some of the GAN astrology type stuff I do, and some of the GAN astrology stuff a couple other people I know do, all suggest that there's a possibility that that a low in May could have a nice bounce.
That'll be interesting because normally it's sell in May and go away, but if we're at 2,000 in the S&Ps,
Yeah, exactly right.
You'll want to play in May.
True, and also from the virus perspective,
I was just going to say we
if
should
they're
be
correct-
peaking then. in May.
yeah, so we would really
Right.
have understood in April, by the end of April, what the hell is going on in North America, how bad things need to get or don't need to get anymore. And then there's been a lot of what's the word I'm looking for here? Speculation that that UV light, sunlight, etc., plays a big factor.
We're hoping for that.
We're
we don't know
hoping,
that.
right?
Yeah.
Exactly. So if that's the case, we would also see, how North America has dealt with it from the first wave perspective, and then we will also be seeing if the natural forces are taking effect. And if both of those things are working out okay, we would probably know in May because the temperatures would be getting warmer and the impact on the hospitals would be far more known. I think we're going to know a lot 2 weeks from now, really. And then that will let us know if that really happens. So I think that there's some pattern overlay here to May. I think that there's some sort of GAN astrology overlay in May. And then I think there is sort of natural forces overlay in May as well, too. So I think that that's for the people that look at time, I think that's important. History has shown, other than right here, that once you get
I forget that.
35, 45, 50% bounces, hits, that there's strong bounces. Even within these pushes down where it does go to like 50, it often kind of goes like 25 bounce, 35 bounce, 45 bounce, finds the floor at 45 to 55, and then resumes up, right? And even here where it did crater all to hell, it still went to 50% and had a strong bounce here. It didn't just go straight down, right? There was this, are things going to get better? Because this is probably, retraces about half the move.
Well, 50% is 1,700.
Yeah.
On the S&Ps, which is a megaphone line down there, 1,800. I'm sure you know that line.
So with that in mind, there would be a zillion different things you'd want to buy. Something I find very interesting that people might want to look at, as long as Oprah stays involved. People can go look this up. This was a study I did a while ago. Basically, here's Weight Watchers before they became WW. Weight Watchers was doing great. Everything's good. Stock, totally crashes. Right in here, Oprah buys a whole bunch. Oprah comes on board. Stock, goes crazy. Oprah sells here. They rename to Weight Watchers.
Get an Oprah's hedge fund.
Yeah, right.
You know how to get in it?
Right. And then after the name change and after selling and making, I think she made 110. Yeah.
How about the weed stocks? Last time you were on, Matt.
Yeah. Well, that's all
ideas. That went to hell too.
Yeah, sure. I'll just finish that idea and I'll mention. Okay, just remind me of it. Okay. And then as she leaves, it totally tanks. As the price is tanking, they're like, we need Oprah again. So that's February 2019. And let's take a look at this blue line. There's February 2019. Bang, Oprah comes back on board. So there's this head and shoulders kind of wonky pattern. If everything goes to shit and Weight Watchers fills this gap, that's going to be an enormous buy because Oprah's going to keep staying on board, and she clearly likes making a lot of money off of this stock. Gold, platinum, silver, palladium has been doing its thing. It's on its own planet. The gold ratios for platinum and then silver are just terrible, ratio. Right? So it's there's really going to be. I don't think there's going to be any relief till the market has kind of had a bit of a bottom, kind of like the 08, 09, or 07, 08, 09 era when everything.
So you think we need a recovering stock market for the gold silver ratio to turn from?
Yeah, because I don't see why.
Right.
I don't see back to this whole thesis of
Yeah,
if something goes down, Bitcoin is going to go down, and
Yeah.
gold is going to go down like it was before, and we're going to get hit hard like in '87 at least, and then our big cycles show us that there's also a lot of crap in the air too. So why,
hmm
for people to go into silver or platinum, there's going to have to be a reason for them to need to go into gold. So unless, and then again, this is very virus based, right? This isn't that balance sheets were ruined and that every company was seeing less and less customers. There was still growth happening before. So we should see, I don't necessarily say, we're going to have an overnight return to growth to the point where we're reaching new all-time highs, but the fundamentals weren't horrible. So silver and there would have to be another fundamental need to go another black swan. I don't think we can handle two right now for that to happen.
Well, didn't we with oil and all the debt from shale companies?
Yeah, well, I mean, and that's
I mean, the bankers
debt,
were
so
there. You
that's,
think the bankers were at the White House to talk about helping us, or
yeah,
that
probably
they
not.
need some help to cover some of this bad debt?
And that's what it is
cracking?
it's debt, right? So that's still good money will find a way to cover bad. Which, so if gold goes, that's why that's back to the beginning again, is that when things first start to pop off, that gold and everything, tends to get hit too, because people are like, oh my God, I lost 50% of my money and these other things are underwater. I've got to sell my positive gold position to fund these losses. That's just kind of the way it happens.
Okay.
There's an interesting is gold USD versus gold and the Canadian dollar, or just emerging markets in general, right? Or actually, Canada isn't emerging, but anything that's not U.S. dollar has pretty much seen new highs in gold. And there's a pretty there's a small case here to say that's kind of a cup and handle ish kind of thing. And we've seen that there's a bit of a triangle at the top here. So at the breakdown of this triangle, there's kind of a doji here and a doji there, and that's with the extension of this line and the extension of this line. The top of it, so there's a top, there's a big sell-off, and then there's a bounce. So this top area here is the same as here, which seen a lot of resistance in Canadian dollars. So if on a monthly basis, things, we're trying to sell good to cover bad right now. And if in a couple of months we find out that the virus didn't take too strong a hold in North America, that could be kind of like one of these kind of scenarios in here where it could hit resistance and maybe, that becomes the dip of the handle.
Okay.
Possible if it's going to continue. If you're a gold bull, that might be a thing to look at, because
How about if you're a gold bear?
if you're a gold bear, then you're saying, well, this is kind of like what we
Failing
call
rally.
an OTE retracement, and then it's going to go back down. But the strong inverse head and shoulders here was a nice play into resistance for sure.
I think it achieved that objective off that.
Yeah. And you're asking about cannabis stocks, and so a lot of that we were looking at was fundamentals, and that Canada was. Let me get my dates right here. October 17th of 2019, it became legal to sell anything other than flowered products in Canada. So like edibles and CBD oil and other products were eligible to come on the market. It was a 60-day wait period to register. So that takes us to December of 2019. So the theory there was that everything had been going down, had been bad government regulations. There was a lottery process in Ontario. So where there was once 1,000 stores in the illegal market was 24 stores in the legal market. The illegal dried product versus the legal is twice the price. So illegal is half the price in Canada. So it's roughly $10 a gram legal and roughly $5 a gram illegal. But it's interesting because in the news or in the reports, they say the cost of cannabis in Canada is $7.50. So it's not actually $7.50. It's either $10 if you go buy it from the store or $5 if you buy it on the street, which is a huge disparity, right? So I think that there's still a large push to stay in the black market. And because of that, and because of really bad government regulations, and because of really bad rollout in places like Ontario, New Brunswick, certain provinces have actually run a loss. And so December comes in for your edibles to be, sold because of the 60-day waiting period. But, now people need to manufacture them and yada, yada, yada. So we were thinking that sometime now sometime in Q1 2020 would be when enough of these markets have started to, products have started to hit the market, and we can maybe see some sideways and bounce on these products, however, or markets because of the products. But the lottery process and everything in Canada has not actually gotten better. The government continues to just be absolutely horrible. If I was a large cannabis investor, I would group other people together and make some sort of lawsuit against the Canadian government, because it's been absolutely ridiculous. Their regulations have definitely hurt companies, and it's horrible.
You want to show a couple of charts of the issues that you talked about and see what they look like?
Yeah. So, Canopy Growth is sort of like the bellwether here, and we've seen an utter breakdown with the market, which could send it back down to $10. We've seen Aurora, which is unfortunate. Now, Weed, which I just did, Canopy Growth, is still a fairly well-run company. Aurora has been having a real hard time. A lot of things have gone wrong, and they, like other big companies, decided to just go crazy on the mergers and acquisitions and bought and bought property and thought that cannabis was going to be the next new thing. So as things pulled back, and as they've had CEO issues and whatnot, they just continued to get killed. So we'll see this pattern here, and then break.
So a lot of dilution on these, Matt, where they're using
I think that's going to start coming in more now. Yeah. So here on Canopy, kind of like this top, and then it kind of bases, right? Which is same thing Aurora did here, kind of top. And there's a little bit of a base under support and fell off. So Weed could do that too. Tilray, I mean, it's under the IPO price now. Holy smokes, that's rough. $6 down from, I believe IPO was 17. So I think that's where this balance was creating here. It was a technical level just under, sort of washing out ICO or IPO holders.
Wow,
and then
200 to $6.
Yeah, exactly right. This company is fairly local to where I live. They have a couple physical products that they sell. Like they have a machine that rolls dried product. They're also the only.
I like the look of this.
Yeah, they're the only. They're the only They're the only company that sells to the province of British Columbia, and for live items. So. Like younglings, clones, whatever people want to call them. So now that
it's 6 cents right now.
Yeah,
7 cents.
Eight, okay. I guess, and it keeps spiking down.
That's a penny stock. Yeah,
for sure. So this company, what they do is that they were a supplier of the clones, so that people that have a medical license could grow in their own home or their own property before, when it was still illegal. And then they still have the rights to sell to the government of British Columbia. And as of a couple months ago, and we still haven't come into our first outdoor growing season, that this company is still the only supplier to the government. And now, because of that it's legal, the government is the one selling the cannabis and the edibles and the clones. So instead of just selling to medicinal customers, this company will then be open to selling up to the general public. And they've also invented and developed their own machine that auto rolls, like cannabis cigarettes. So I know that the CEO of the company bought quite a lot in here, I think, when they were, you can see there's a lot of green dots under these candles because there was actual real buying happening. That got washed out, and then it's this kind of breakout here level sort of provided support lately. So I think this is an interesting company for people to check out, just because they do have government contracts, and it's been quite a number of years. I think that the biggest push for anyone that's looking to go back into cannabis will be wanting to look at companies that operate in Canada and in the US, because the Canadian market is getting, because things have been so bad, now there's kind of like an oversupply, and that's also pushing down a lot of heritage. All of the companies are getting pushed down. Heritage is already back to.
Well, we're at our second limit in the S&Ps right now, Matt.
Jesus. All right. So
anyway, listen,
yeah.
I have something I want to leave with you. It's a little poem I wrote about Corona.
Okay, let's do it. No.
You haven't seen it on Twitter?
I haven't.
Corona, fear that I'll own ya. Born in a lab in China, spreading so I'll find ya. No one is safe, not even a king, and I'll be the excuse for everything.
Oh, my Corona.
Oh yeah, I forgot about that song. Anyway, are you in the States, or you're in Canada, or where are
Canada,
you?
yeah, West Coast, kind of halfway between Vancouver and Calgary in the Okanagan.
Okay, well, Matt, what a great presentation, man. I stay healthy and keep in touch with me, and I'll get back to you later today on Twitter, and we'll set up a date a few months down the line, see how things are playing out. And I really appreciate all your hard work and preparation for every time you come in here. Thank you, my trading warrior brother.
Awesome. Thanks for having me.
All right. And the best place for people to follow you, Matt, is Twitter.
Yeah, for sure. It's definitely Twitter.
Okay. So you can follow Matt at DJ Thistle, THI, 01. And that's where you'll find his work on Twitter. Thank you, buddy.
Thank you. Have a great day. Bye-bye.
All right. Adios. Oh, guys, remember, don't just count your pips, count your blessings. We'll see everyone tomorrow. You're welcome, everyone. You're welcome.